Hey, what's up, YouTube? We're going to be talking about a very important topic that every trader goes through, which is losing money in the stock market. This is a thing that you want to try to avoid, obviously, if you want to keep your account in the green. But there's different ways you can lose money in the stock market, which is taking bad entries, kind of things don't go the way you wish. But we're talking about the big losses where it kind of destroys your account, makes it very hard to recover. You're working with less money to try to work back up to what you lost, and that's one of the that's one of the things that actually furthers the losses. So we're going to talk about that. And I actually saw a thread on Twitter where someone was asking, "What are your biggest mistakes as a trader, as a beginner?" And the one that I saw the most common was holding losses, holding bad stocks, holding bad positions. We're looking at a firm, for example, because it just made a very big move, and it's a great example for this topic. But you can see that it's very bullish here, and then it comes down pre earnings and then jumps back up. And so most people might think that it's going to continue up. It has good momentum, good earnings. What is there to miss? It got good earnings and a good price target upgrade. It was already bullish. So a lot of people bought in here, and it started to sell off right after, the day after. It came back down like $20. This stock has a huge range, as you can tell. It makes big moves, and it also makes big moves downward. Easy come, easy go. But a lot of people were talking about holding losses. And another thing that people were talking about was double dipping. So in other words, you're down. Like if you look here, someone could be down. You buy more shares, so that way when it comes back up, two things could happen. You either break even quicker, or when it returns to your original price or above, you end up making much more money. You're assuming that that's the bottom, and you're waiting for a green candle or some kind of confirmation, and then you buy more. That way, since you're going to be waiting to break even anyways, you have more shares coming back up. The problem with that is that it doesn't always need to happen that way. The stock market doesn't need to recover. A specific stock doesn't need to recover. And momentum changes. Buyers change. The pressures to sell changes. And so while in these three patterns, it might work where, let's say you go down and then you think this is the bottom. So you buy more and it comes back up. Boom, you win. And then you do it here. And then you do it here. It really only takes one time for you to get faked out where let's say it drops here, you see a green candle, you think it's going to come back up, so you double dip, you buy a double amount of shares, and it keeps falling. And at this point, you're committed. You have a lot of shares, you have a lot of money invested, and you have no other choice but to kind of wait. So boom, you buy in more, and then it keeps dropping, and all of a sudden, by the time you know it, your whole account is down, and it doesn't make sense. And then here we had an example of good earnings, so it came all the way back up, almost broke even with the high, and then maybe you hold. You think that it's going to have good momentum. It just got a huge amount of buying, and boom, it comes right back down. So now you're still holding. Maybe even you think, you know what? Maybe it makes sense that people sold off because people were buying just to make the profits. But now we have good guidance, we have good earnings, and we have a good price target upgrade. So it must come back. So you buy more shares, and then it continues to fall and continues to fall. And then you get bad news, and it continues to fall. And I've heard that the longer you hold a share or a stock, the less risky it becomes. But it can also work the opposite way too. It doesn't always need to be your favorite to come back up. The longer you hold it, you're vulnerable to good news and bad news as well. So here we had bad news and it came down even more. And my whole point is that while that pattern of double dipping on stocks might work a lot of the times, it makes it even very riskier because it already dropped. You're already in the red, and you decided to not take your losses, and you're buying even more. And you're making that conscious decision to buy more, but you're expecting it to come back up. Now, if you have deep pockets, you can hold this forever. You can keep doing that. I mean, if you have deep pockets, you're fine anyways, but you are going to tie up a bit of your capital. But yeah, so a lot of what people were talking about is that they were buying and expecting it to come back up, and it just never ended up coming back up. And as you can tell, if it ends up consolidating down here and it takes months, years to come back up here, all of a sudden your capital's tied up. It's not going to recover. It might have good price target, might have good earnings, things that catalysts that could potentially make it good long term, but do you really have long term to work with? If you're used to swing trading or making some kind of revenue off this normally, where you're in and out and you're off to a new stock, you're in and out and you're off to a better position, you're getting out at the highs and trying to buy the dips, things like that. Can you really afford to leave your capital tied up here? And it's just a very risky thing, something to consider when you're buying shares, something that could one day save you, something that can also cause you to lose profits. Like again here, if you take this loss, I mean, this is really what it comes down to. When people take losses, you don't want to take that loss, so you either wait or you buy more. And sometimes it does help you because you don't want to take a loss. Because imagine what happens to a lot of us is we sell here and it comes back up and we're left thinking, wow, if I would have just held, I would have broken even or even made profit. And that has to be a really bad feeling. But an even worse feeling is it coming down, you thinking that's the bottom, you buy more, and it keeps falling, it keeps falling, it keeps falling. You just don't understand why it's happening. And this is killer. This probably hurt a lot of people here. A lot of people were probably hopeful that it'd come back up. A lot of people probably sold here, 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 even down here. A lot of people probably sold here thinking, man, I cannot afford this loss. And if we have bad earnings, it's going to be this candle size, but downward. So they sold and it recovers. So imagine how much that felt. Imagine all the people who sold here and it recovers here. They take that loss. Maybe they couldn't even buy until about here. And they take a loss for no reason. And it's just not something to really play with at the end of the day. I mean, of course, you manage your own risk. You make the choices that are best for you. But it just goes to show how one trade, doing that strategy of double dipping on double dipping and double dipping some more, can really cost you, especially if it doesn't recover the way you think. Now, this was within probably an hour when it had good earnings, which is crazy because this was a 3-day fall. That's another topic I want to cover very soon is why stocks drop a lot faster than they recover. I mean, in this case, it had earnings, but like think about this here. It's dropping from here, and now it has to wait for confirmation. It was about to come back up, but then they had earnings of a private offering. And I'm still a bit new to this, but I learned that that's not the greatest thing for the shares or for the shareholders. And so it started coming back down. And yeah, so whenever there's a share offering, it tends to be bad news or it kind of affects the shareholders' confidence in the stock because they don't get to have any kind of say in that. It's select investors that they're offering certain shares to instead of, I guess, public. So yeah, that's the topic I want to cover. If you have anything that's happened to you, any of your experience, please leave that in the comments because, hey, I mean, we're all trying to get better here and minimize our losses. And I think a lot of times position size is something that can really sway. And when you're trying to double dip, you're expecting to come back up and you're getting out. But when you have a huge position size, like you're going to take huge losses faster, much faster. And fear selling might cause you to just take an even bigger loss than necessary. But yeah, it's all about managing risk, staying in the game as long as possible. And we all take losses. And that's really the best way to recover because people could tell you, I could tell you, people could tell me that the best way to manage risk is to do certain things or never do this. But until you really feel it hard and you experience it, you're gonna be trading with that mindset. Like if someone told me to not hold your losses and then I hold a loss and it comes back up, I'm going to be like, well, they might not be wrong, but in my case, I got rewarded for it. And then something like this happens and you really, really feel what they meant. And it's something that you'll never forget. And it might be worth taking these small losses and just getting in at better positions than experiencing something like this again. And at the end of the day, it just builds the way you trade, the way you think, the way you might manage your risk. But yeah, if you have any stock picks or anything you want me to go over, I'd be happy to. I'd be very interested in covering stocks that I don't have on my watch list. I'll make a watch list video soon on certain stocks that I'm covering and why I'm covering them, or having them on my watch list and the different types of watch lists I have. But yeah, if you want me to look over a stock, I tend to have like a different variety of stocks. I like plays that are coming off earnings. They typically have more volume and new price targets. And so they're very consistent. More people get behind it. It's big news. People always look at it. There's always different kinds of news that kind of cause stocks to run multiple days. Whenever it has high momentum or high volume, it tends to go multiple days. I like those. And as you can see kind of here, some of the ones that people talk about a lot, we have EV. We have a small amount of code plays. I don't really mess with these too much, but I do like watching them because it's very interesting how certain meetings or political announcements kind of affect them, or new updates and purchases of their vaccines or pills and stuff like that. And IPOs are great. Companies you recognize. I have a good variety of mix of things here, but typically the stuff that's going up in the day I'll keep an eye on as well. But yeah, that's going to be it for this video. If you did get something out of this video, please leave a like. I really appreciate it. And until next time, I'll see you guys.